Hi guys, thanks for tuning in to another episode of Nuggets News. Today I want to talk about what's going to happen when a lot of these ICOs may run out of funds. So last year was the boom year, over $5 billion raised. Some big projects raised upwards of $100 million. The average ICO raised around $12 million, and obviously a lot of projects raised less than that. So last year all this money was flooding in, very few projects sold and locked in that money to ensure their future. So as we see here, projects were quite happy to sit on Ethereum and their own tokens as they went up in value, and it all looks good on paper. But now we're down 70 to 90 or even 95% for some of these tokens. Their equivalent value is less in US dollars than what they initially raised, and they're going to have to make some pretty tough decisions soon. So I want to talk about how I see all this playing out and what options they have. Okay, so thousands of ETH being sold lately. It's in the headlines. It makes it sound like everyone's just dumping all their ETH, but the actual numbers suggest that only 5% of Ethereum raised has been sold. So your project, if it's transparent, they let you know the ETH address, you can see their balance, and you can get an idea of how much runway they have left. Now, the price has gone down since a lot of these projects raised now, sitting at $200. The first thing we need to acknowledge is that if the markets recover, yes, Ethereum's going to go back up. Projects look a lot healthier pretty quickly once their token price and the Ethereum price, or whatever tokens they raised in, goes up in value. So I want to talk about all those factors that are going to determine the if and when, but the good projects will survive and come out the other side of this and then benefit, just like we saw Digex and those projects that raised early that are now sitting on plenty of Ethereum. So your project has hopefully got a chart like this in their white paper to let you know what they were planning on spending the tokens on and the proceeds of the funds. So hopefully they've got an ETH reserve and plenty of tokens reserved for future development. But what I think is going to happen is the use of these proceeds, the percentages are going to change. They're going to have to cut from some places and spend more on wages, maybe pull out some of their own money or long-term funds that they hadn't have hoped to sell, and sell their own tokens at a lower price. So tough decisions to be made. Again, keep an eye on the progress of your company and check for updates. Even if they have those tokens set aside to sell, what if the volume just isn't there? And nothing against this project, it's in the top 100. If they decide they need to raise a couple of $1 million, it's going to be pretty hard to do if they're not listed on big exchanges and there's no trading volume there. So obviously we can do this OTC. If you get good partnerships or you onboard customers, pay your staff, you can offer them tokens, but they're going to want liquidity. They're going to want to know that they can sell this. And a lot of projects are trapped now. Thousands of projects, exchanges don't want to list them. Now this is going to change in the future. We're going to have more decentralized exchanges. Hopefully that helps with liquidity, but this will not be an issue for security tokens. Now that it's regulated, with regulated exchanges, they're all going to be listed. They're just going to want to collect fees and they've got nothing to worry about. So very different story for the security tokens, and I've spoken about these a lot lately. The next thing that I just wanted to mention was these open source projects. So it is possible for projects to survive without having this reserve pool of funds per se, like these ICOs. So Bitcoin has contributors. A lot of these other projects that are truly open source have people that have been mining it or investing it for a long time, and they're now pretty wealthy and they just want to contribute. They're passionate about this. Some of the newer projects have a similar model, but they reserve a small percentage of the block reward to development and so on. So there's different models. Hopefully you know what that is for the coins you're invested in. But it is possible for truly open source projects to survive. Now, for these projects that have the funds, how they're going to use them is always pretty topical. So we see these big stories of Ethereum moving to an exchange. That doesn't always mean it's the case. If you see Ethereum moving out of your coin's address, it can be just going to a smart contract to another cold wallet or so on. Depends on their level of transparency if they'll let you know ahead of time what that's going to be so you don't panic and so on. But something like Digex has got a pretty clear-cut method of governance. They propose what they want to use funds for to the community. They tell them, when this is going to happen, you've got to vote on this time, and it's a yes or no process. So I really like these style of governance models and other DAOs we're going to see in the future. Some projects have had issues with governance and so on. It's something that we're still working out what the best fit is. The next thing to talk about is that some of these projects aren't going to have a choice but to sell to pay tax bills. So when you raise money as a company on the stock market, you're selling equity in that company and you don't get taxed on that, versus when you sell utility tokens or a platform as a company, that's revenue. You're not selling a stake in the company. So a lot of these projects now had an ICO, raised a certain amount of money at Aussie dollar value or US dollar value, and now that's gone down, but they still have a big tax bill on paper. So we're hearing stories about private rulings. Maybe there's new legislation in future. We've already seen projects, prefer to move to Malta or Cayman Islands, where these jurisdictions have friendlier regulations as well. So let's see how all this plays out as well. You've heard me say it's a square peg trying to go through a round hole, unfortunately. Next up, thanks to Jack, who shared this article with me about the new standards that, the project itself, the investors, the community, they want to set the bar higher than just this crazy, some of the stuff we had going on towards the end of last year. So regular reporting, letting investors know about vested contracts and when new tokens will come into circulation. Ripple's been criticized about having 60% still yet to come into supply, but they've said it's not going to come into circulation at a rate higher than, I think it's 0.25% a month or something like that. So there's no nasty surprises. You're not going to get diluted overnight. Now, I covered Elastos only a week or two ago, and I spoke about be aware that there's a big total supply, a lot of big initial investors, angel investors, and today they announced that a few of those vested tokens are going to be unlocked. So the market goes down. People never like to be diluted, but you have to ask, is this for a good cause? Is this going to be used to expand, partner, and so on? So there's two ways you can look at this. And something like Veritasium, I used to own this one. I did become a bit critical of it. 100 million tokens and only 2 million in circulating supply. So the company still owned 98%. Now, that would just be devastating if that came into circulating supply at once. That's not going to happen, guys. Hopefully they can use it, as I said, onboard partners, get development and so on. But you need to be aware, if you're going to invest in these projects, what the overhang of tokens is versus the current circulating supply. And the fact is they're probably going to need to use those funds, as we said, to pay the bills going forward. So next up, I want to talk about the options that the projects have that have a company sitting behind them. So they might have had an ICO to build some software, a platform, a project, and you own that utility token that represents a part of that now. But if there's a company behind them and they're running out of money, they can sell equity, a percentage in that company. Now, they might decide to do that as a security token, or they might decide to do it as, equity on the stock market. So they're the options they have, and where do they go from there? So how do traditional companies raise money? And the answer to that is friends and family, angel investors, there's incubators and crowdfunders, Kickstarter these days. Some companies will even sell bonds, all sorts of options for companies to raise money that will depend whether or not investors think they're getting a good deal, that they're going to get return on their capital in the future. Next thing I want to talk about here is this natural cycle that we see in commodity markets. Prices of resources go up and down, and we see these junior mining companies often go broke that are exploring, and this is very similar to ICOs. So I think we're going to see mergers and acquisitions. How often do we see it, even just in Australia? There's companies that are doing the same thing or a lot of overlap. Those developers might get a better deal, or they see the ship sinking and they go to this other project because they're doing something similar. So all this is going to happen. It happens in the mining space. I think it's going to happen in the crypto space as well. The final thing I just want to mention is I'd love to see changes in legislation to be more friendly for startups, because this is all part of the natural business cycle where we have these contractions, expansions. Crypto is volatile, but things like that tax bill, and I'd love to see initial investors get a tax break. We had a proposal in 2015 for investors in early stage startups to get a bit of a discount on profits. I'd love to see, lower tax rates for startups in the first year or two, give them a chance to survive and come out the other side. So all part of the natural business cycle, guys. We need to weed out the bad projects. The good projects will succeed and flourish. What do you guys think? Is Ethereum and the market going to recover and these projects are going to be fine? Or are they going to have to go down this path of selling equity and raising funds in other ways to keep the lights on? Or are 99% of projects going to fail, as we've continued to say? I hope you've enjoyed this presentation, guys. Hit that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.